Hello, today I'm going to give you a lesson about cost volume profit, which is a prerequisite for cost behavior. That's not correct. Cost behavior is a prerequisite for cost volume profit. Cost volume profit is a management accounting technique used to evaluate how costs and profits are affected by changes in the level of business activity. Managers are constantly faced with decisions about selling prices, sales volume, sales cost, in order to find the right combination to produce satisfactory results. We can answer questions such as, what is the firm's break-even point? So how many do we have to sell to earn neither a profit nor a loss? What level of sales must be achieved to earn a satisfactory amount of net income? How will sales volume be affected if sales prices are increased or decreased? We can call this the what-if analysis. The income statement contribution margin format, which we just completed, provides the information needed for cost volume profit analysis. So there are several equations that we can use in order to determine our break-even point. So our break-even point is the sales volume at which revenue and total expenses are equal, which results in no net income or no net loss. Knowing the break-even point is particularly important when a firm introduces a new product or enters a new market. Some of the equations that we can use to determine this break-even analysis is the break-even equation. Sales, which is the number of units sold times the selling price, minus variable costs, the number of units sold times the variable cost, minus our fixed costs, which will equal 0. That will help us determine what our break-even point is, how many we have to sell in order to earn no profit and incur no loss. To earn a before-tax profit, we use the same equation, but instead of 0, we're going to put a dollar amount at the end of the equation. To earn a before-tax profit of a percentage of sales, we're going to use an equation that times our percentage of sales times the percentage that we wish to earn. So I'm going to do some of the examples here with you. Question 10. The hair company sells a product for $30. Variable costs are $18 per unit and the fixed costs are $36,000. So if we use our break-even equation, we're going to use our selling price, which is 30, times the number that we're going to sell, which we don't know, so X, minus our variable cost, which is $18, times the units that we're going to sell, which we don't know, so once again that's X, minus our fixed costs, which are $36,000, equals our break-even point of 0. So we're going to solve for X. So 12X equals 36,000. X equals 3,000 units. Okay, so our break-even point, we need to sell 3,000 units. If the firm wants to earn a before-tax profit of 9,000, how many units must be sold? So we're going to use the same equation, 30x minus 18x minus 36,000. But this time we want to earn $9,000. So let's solve for x. 12x equals 45,000. X equals, I have to get out my calculator. So 45,000 divided by 12, 3750. 3,750 units need to be sold. And in the last example, If the firm wants to earn a before tax profit of 16% of sales, what sales volume must be sold? So our sales number once again is 30x because that's how much we're going to sell it for, minus 18x minus 36,000 equals decimal 16 because that's the equivalent of 16% times our sales, which is 30x. Okay, so we have 12x minus 36,000 equals 4.8x. Then we solve for x. So 12 minus 4.8 is 7.2. So 7.2x equals 36,000. Oops. 0.2. X equals 36,000 divided by 7.2, 5,000 units. All right, let's try company X, and we're going to come up with those same three equations. So our selling price is $5, so 5x minus 4x minus 20,000 equals 0. So we have 1x equals 20,000, so x equals 20,000 units. Hopefully I'm not going too quickly for you. I'm going to do one more for you, and then I'm going to pause the video and put in the answers, and you can check the answers afterwards. How many units must be sold to earn a before tax profit of $10,000? So we have 5x minus 4x minus 20,000 equals 10,000. So we have 1x equals 30,000, so x equals 30,000 units. And the last one, how many units must be sold to earn a before tax profit of 15% of sales? So we have 5x minus 4x minus 20,000 equals 0.15 of sales, which is 5x. So we have 1x minus 20,000 equals 7.5x. How about 0.75x? Then we have 0.25x equals 20,000. So x is going to be equal to 20,000 divided by 0.25, 80,000 units. All right, I'm going to stop the video and put in the remainder of the answers, and then I'm going to have you have a look. So you can try company Y while you're waiting. All right, I hope you've had a chance to do the answers for company Y and company Z. So I'm just going to quickly scroll through the answers. The break-even point for company Y is 37,500 units. To earn a before tax profit of 210,000, we have 90,000 units. And to earn a before tax profit of 30% of sales, we need to sell 150,000 units. And the final one, company Y again, we have 7,000 units for the break-even point, 95,000 units for the before tax profit, and 100,000 units if we wish to earn 10% of sales. If you have any questions, please let me know, but I'm sure you'll be fine.